Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, through the week we've seen some whipsaw price action, and especially in the Australian dollar. Since the rejection from that top side around that 78 level, we can see that the market has now taken a downturn to challenge the support level, which comes in around 76, 60, 80 area. As we can see, it looks and appears to be a bull camp from this region after the market took a challenge to a low of 76.87 and rebounded and posted a dragonfly doji to a weak case. However, it would seem into the European session the bulls are attempting to try and take the market higher. I feel at this point that we are still vulnerable to the downside due to the RSI under the midway point and the MACD showing a weak negative signal. A clear break of this level of 76, 60, 80 area would expose a region of 75 cents. But wait for the break and also be very cautious because we've seen many bounces from this region, and from Thursday's session could see the beginning of a short-term rise but likely to run into trouble close to that 77 area. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, still holding to a relatively bullish case, may see this current upside attempt in the euro fail. And as we climb higher, the bears are still waiting from that 121.80.90 level, which is also about 80-90 points away, as you can see from the current price action. Nevertheless, there's a couple of patterns coming out from this. Now, if this is a shoulder head, then we've still got to wait for the right shoulder or keep an eye on the technicals. Nevertheless, either way, I feel the market is potentially building to a bear case and see a move back towards that bottom side around 119 and reassess. Dollar yen failed to stage any significant move since the Wednesday rally due to the CPI number that came out greater than expected. However, from the technical pattern, still remains somewhat negative and capped from that 110 area, and I do anticipate a move back towards that bottom side around 108.45 to 50. The sterling took a challenge to the downside but didn't take out that level of 140, the figure. After the 141 rejection 2 days ago, with the dollar strength returning, still at present haven't quite broken down, so still wait for the break or close under New York of 140 figure to reinitiate the bearish case to 138. With the pound not completely breaking down, sterling yen is still holding as well, and there's still to a 39-month high. Keep an eye on these technicals because the last 2 attempts on the downside didn't break the midway point, and the third case could still be a rejection, and therefore still keep 154 to 55 focus in play until we get an initial breakdown in sterling of a close under 140 the figure, with the sterling leg being the main case. Looking at the gold, well, we did break down overnight, but didn't take out and close underneath 1,812. And from the rebound, has put the focus back onto that top side again. However, I wouldn't get too caught up in this pattern to the bull case. I feel that we are slowly unwinding to a bear case, and a close under 1,812 would see a move down to 1,760.80 area. Wrapping up with oil, well, the market fell back towards its trend line, and presently still remains the focus around 62.5. If we see a break of that level, that would see further risk down towards 58. But with that being said, I still feel that we could see a bounce off this level. So I'm not going to get too bearish at the bottom or close to this broader trend in case we do see a rebound back to that 66 area. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new weekend.